The financial markets are full of surprises, but every once in a while, a story emerges that captures the imagination of traders and investors around the world. Today, CaliberCos Inc., ticker symbol CWD, provided exactly that kind of story. A stock that just days ago was trading around $2 suddenly catapulted into the stratosphere, delivering gains that most people only read about in history books. In pre-market trading, CWD surged by more than 2,000%, climbing from just over $2 to more than $47 per share. Once the regular session opened, the stock still posted gains of over 1,000%, with prices moving in a wild range between the mid-20s and the mid-30s. To put this in perspective, a 2,000% increase in a single day is the kind of move that turns $10,000 into more than $200,000 in just a few hours. These kinds of returns are so extreme that they immediately invite two questions. What happened, and can it last? The story begins with CaliberCos itself. Caliber is not a giant multinational company. It is not one of the household names that dominate the S&P 500. Instead, it is a niche player, a real estate investment and management company that has historically specialized in middle-market assets in regions such as the American Southwest. The firm built its reputation by targeting undervalued or distressed real estate, repositioning those assets, and trying to unlock value. For years, this was its business model: find properties others overlooked, invest, manage, and eventually sell at a profit. But the reality in recent years has been tough. Caliber's revenues collapsed, declining more than 90% over a 3-year span. Its profitability also deteriorated, with EBIT margins sinking to negative 55%. Perhaps most alarming of all, Nasdaq recently flagged Caliber for failing to meet listing standards, pointing to a negative equity position of around $17.5 million. In short, this was a company facing serious challenges, a small-cap stock flirting with the risk of delisting. And yet, this struggling real estate manager is the same company that today became the star of Wall Street's most spectacular show. The catalyst was a bold and unexpected announcement. CaliberCos revealed the execution of its Digital Asset Treasury Strategy, a plan to allocate part of its corporate treasury into blockchain-based tokens. Specifically, the company disclosed that it had purchased Chainlink tokens as part of its reserves. This decision, radical for a company of its type, immediately set off fireworks in the market. Blockchain is still considered speculative by many institutional investors, but among retail traders and enthusiasts, the narrative is electric. Caliber wasn't just talking about blockchain. It was putting real money into tokens and forming a crypto advisory board led by Michael Trupek to guide the effort. For a small-cap company to pivot from real estate into digital assets was enough to trigger a rush of speculative buying. Traders piled into the stock, volumes exploded, and the price action turned vertical. In the pre-market session, as early orders stacked up, the stock leapt more than 20-fold, touching over $47. By the time the regular session opened, the frenzy was in full swing. Prices swung violently, at times above $35, at times closer to $25, but always far above the $2 baseline where the stock had been just a day earlier. The math of these moves is staggering. From a base near 2.05 to a pre-market high above 47.20 represents a gain of more than 2,000%. Even after the open, with intraday highs in the $24-35 zone, the stock was still up over 1,000% on the day. Such numbers defy ordinary logic and serve as a reminder of just how powerful narrative can be in financial markets. What makes this even more fascinating is the contrast between Caliber's fundamentals and its price action. On one hand, here is a company with declining revenues, persistent losses, and negative equity. On the other hand, here is a stock that suddenly behaved like the hottest ticket in town, fueled by a single announcement about blockchain adoption. This contrast highlights the role of psychology in markets. Investors love stories, and the story of a struggling real estate manager reinventing itself as a blockchain adopter was irresistible. It is worth noting that this is not the first time CWD has experienced a parabolic move. Just weeks earlier, the stock spiked more than 100% in a single session without any clear fundamental news. Analysts at the time chalked it up to speculative trading, perhaps triggered by retail enthusiasm or algorithmic momentum. Today's move, however, had a more tangible catalyst, giving traders a narrative they could latch onto. That narrative rests on Chainlink, the token Caliber selected for its treasury. Chainlink is not just any cryptocurrency. It serves as a decentralized oracle network, providing data feeds to smart contracts across various blockchains. In simpler terms, it is infrastructure. If blockchain applications are to interact with real-world data, such as stock prices, weather conditions, or sports scores, they need oracles to deliver that data in a secure, decentralized way. Chainlink is the leader in that space. By choosing Chainlink, Caliber aligned itself with a project that has genuine technological significance, not just speculative buzz. Of course, buying Chainlink tokens does not instantly solve Caliber's financial problems. The company still faces a deeply negative equity position, ongoing losses, and scrutiny from Nasdaq. Blockchain adoption, while exciting, is not yet profitable for Caliber. But in the world of markets, perception often comes before reality. Today's announcement created the perception of transformation, and traders rewarded it with a surge unlike anything else seen on the Nasdaq this week. From a technical standpoint, the chart is now in uncharted territory. Old support and resistance levels are obsolete. When a stock multiplies 20 times in a single day, traders must re-anchor their analysis. The key levels now are the pre-market high near $47, the opening price around $45, and the intraday VWAP. Psychological levels such as $50, $40, and $30 also matter, because traders often cluster orders around round numbers. If momentum continues, those levels could be tested quickly. If profit-taking sets in, the stock could retrace just as violently. For long-term investors, the question is whether this is the start of a genuine turnaround or simply a speculative mania. The fundamentals suggest caution. A company cannot erase years of declining revenue and negative margins with a single blockchain announcement. But markets are forward-looking. If Caliber can integrate blockchain into its business model, perhaps by tokenizing real estate assets, creating new revenue streams, or leveraging Chainlink to improve transparency, then today's move could mark the beginning of a new chapter. For now, what is undeniable is that CWD has entered the spotlight. It has captured the imagination of traders, analysts, and media outlets. Its story will be followed closely in the weeks to come. And for those who witnessed today's surge, it will serve as a reminder of how quickly fortunes can change in the stock market. The story of CaliberCos after today's surge is more than just a chart with parabolic lines. It is a case study in how narratives, speculation, and strategy intersect in financial markets. To truly understand what this means for investors, it is worth examining the risks, the possibilities, and the psychology that drives such moves. First, the risks. A company whose stock has just risen more than 2,000% in pre-market and more than 1,000% in regular trading is, by definition, volatile. Volatility is both opportunity and danger. On the one hand, it creates the chance for extraordinary profits. On the other hand, it exposes investors to equally extraordinary losses if momentum reverses. History is filled with examples of small-cap stocks that experienced explosive gains only to give them back in days or weeks. The phrase, easy come, easy go, often applies in markets, and CWD could prove no different. The underlying fundamentals must be considered. Caliber remains a company with declining revenues, negative margins, and negative equity. These issues do not disappear because the stock went up 20-fold in a day. Unless the company can demonstrate improved operations, stronger financials, or a credible long-term strategy that ties blockchain adoption to sustainable profits, the risk of reversal is high. This is especially true because Nasdaq's compliance warning still hangs over the company. If Caliber fails to present an acceptable plan to restore positive equity, the risk of delisting remains regardless of today's market fireworks. Second, the possibilities. While caution is warranted, it is also true that bold moves sometimes create genuine opportunities. By embracing a digital asset treasury strategy, Caliber positioned itself as one of the few publicly traded companies to hold blockchain tokens as part of its reserves. That alone differentiates it from thousands of other small-cap firms. The choice of Chainlink adds credibility, as it is a project with real-world use cases and a strong position in the blockchain ecosystem. If blockchain adoption continues to grow, if tokenization of real-world assets becomes mainstream, and if Caliber can integrate these trends into its real estate expertise, then today's move could be seen in hindsight as the beginning of something transformative. Imagine, for example, a future where Caliber tokenizes portions of its real estate portfolio, allowing fractional ownership and greater liquidity. Investors around the world could own small pieces of commercial real estate through blockchain-based tokens. The process of raising capital could become faster and more efficient, while providing investors with new opportunities. In such a scenario, Caliber's early embrace of blockchain would look visionary. Of course, these are speculative possibilities, not current realities. But the fact that they can be imagined is enough to fuel excitement, as markets are always forward-looking. Third, the psychology. Human behavior plays a central role in moves like this. Traders are drawn to stories, and few stories are more compelling than the idea of a struggling company reinventing itself as a pioneer in the hottest new technology. Add the possibility of enormous short-term gains, and the result is a feedback loop. Early buyers push the stock higher, the rising price attracts attention, more traders pile in, and the cycle feeds itself until exhaustion. That is how a stock can rise 2,000% in hours. The danger is that when the loop breaks, when buyers stop outnumbering sellers, the reversal can be brutal. Today's surge in CWD will also attract attention from regulators and exchanges. Extreme volatility often triggers scrutiny, particularly if there are concerns about market manipulation or unsophisticated investors being drawn into risky trades. Nasdaq, already monitoring Caliber for compliance issues, will almost certainly review the trading activity. While nothing illegal has been alleged, the sheer scale of the move will ensure oversight. From a technical perspective, the stock is in uncharted waters. The pre-market high of around $47 is now the new reference point for traders. The opening price near $45 will be another key level. If the stock manages to hold above $30 in coming sessions, bulls may argue that a new trading range has been established. But if the stock falls back toward the teens or single digits, it will be seen as another example of speculative excess. In such environments, traditional technical indicators like moving averages lag behind the reality of intraday volatility. What matters more is volume, momentum, and psychological levels that guide trader behavior. For investors looking for lessons, the CWD story highlights several. First, the power of narrative cannot be underestimated. A single announcement about blockchain turned a distressed real estate manager into one of the hottest stocks on Nasdaq for a day. Second, fundamentals eventually matter. Narrative can drive short-term moves, but long-term value comes from revenue, profits, and balance sheet strength. Third, timing is everything. Those who bought at $2 and sold at $35 made fortunes. Those who chase at $35 may face losses if the stock retraces. The role of blockchain in this story is particularly interesting. It shows how digital assets are increasingly intersecting with traditional finance. Even a company rooted in real estate is now experimenting with holding tokens in its treasury. This suggests that blockchain is no longer a niche for tech companies alone. It is becoming part of the broader corporate landscape. Whether this is a lasting trend or a passing fad remains to be seen, but the fact that it can move markets so dramatically is significant. Looking forward, what might happen next for CWD? Several scenarios are possible. In a bullish scenario, the company leverages its blockchain strategy effectively, restores its balance sheet, regains Nasdaq compliance, and uses its newfound attention to raise capital and expand. In a bearish scenario, the stock gives back most of its gains. The blockchain move proves symbolic rather than substantive, and the company continues to struggle financially. In a middle scenario, volatility continues, with the stock oscillating between spikes and corrections as traders speculate. For long-term investors, patience, and discipline are key. Investing in CWD now requires accepting extraordinary risk. The company could reinvent itself, or it could fade back into obscurity. The reward may be high, but so is the risk. For traders, the opportunity lies in the volatility itself, provided they manage risk carefully. Stops, position sizing, and discipline are essential when dealing with stocks that can move hundreds of % in a single day. In conclusion, today's events with CaliberCos Inc. are a reminder of both the excitement and the danger of financial markets. A company on the edge of delisting suddenly became the star of the day, soaring by more than 2,000% in pre-market and more than 1,000% intraday, thanks to a bold blockchain announcement. The move was real, the gains were real, but the risks remain very real as well. As Warren Buffett once said, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. Today, CWD received millions of votes in favor of its blockchain pivot. The weighing will come later when investors evaluate whether those votes are supported by sustainable fundamentals. And now, the question turns to you. Do you believe Caliber's embrace of blockchain is a visionary step toward reinvention, or just a speculative distraction from deeper financial issues? Share your thoughts in the comments. If you found this analysis valuable, don't forget to like this video and subscribe for more deep dives into the stories shaping today's markets. The future of CaliberCos remains uncertain, but one thing is undeniable. On this day, it captured the spotlight, delivering one of the most spectacular moves in recent memory and reminding us all that in the markets, anything can happen.